In this video, we will discuss what it means to be in a best and final situation in the real estate world, when and why it's used, as well as 3 strategies to help you get your offer accepted. Here we go! So, what is it? In real estate, the best and final situation is when a seller sets a deadline to receive all offers from interested buyers. This gives the buyers who are interested in purchasing the home an opportunity to put their best foot forward with their offer in an attempt to get it accepted and then purchase the property. A seller may call for best and final when they receive multiple offers, and instead of countering each one individually, they'll avoid the back and forth negotiation and ask for each buyer to give their best offer with best possible terms. It's important to note that typically when best and final is called for, you will not have the opportunity to revise your offer after the deadline, nor will you be afforded a counteroffer. So, the house you fell in love with is calling for best and final. Before we explore the strategies available to help you get your offer accepted, it's important that you fully examine your finances and the market in order to understand whether or not is a good time for you to purchase. With the market being very competitive, the best and final offers are usually thousands above the original asking price of the property. It is highly recommended that you understand your monthly budget in comparison to your total spending, because the amount of mortgage you may qualify for may not take into consideration your lifestyle choices. For example, if you like to go out to eat every day or take several vacations a year, you may want to budget for those items before committing to 30 years worth of the same payment. Unless you sell, of course, in which case, you can call me. With interest rates being at historic lows, it has caused a lot of buyers to enter the market because they have more buying power, but that does not necessarily mean that rates will stay this way forever. There is a ton of controversy about whether or not home values will continue to rise or decline, but everybody seems to be on the same page about interest rates ticking upward. Depending on the scenario, if the interest rates rise, despite a slight decline in the home prices, you may have the same or higher monthly payment. Definitely evaluate your personal circumstances before entering the housing market. Once you've decided to buy a home, here are some strategies you can use to get your offer accepted should you find yourself having to submit a best and final offer. Strategy number 1 is figure out what the sellers need. Every homeowner has different circumstances in which they are selling. Some people are relocating out of state, need a bigger home, need a smaller home, lost a family member, they're getting divorced, you get the idea. Each circumstance may make certain terms of your offer more appealing or less appealing to the seller. For example, if the house you're looking at is in a state where the executor does not live close by and the house needs some work, the seller may prefer an offer that can close quickly and for cash so as to avoid any lender-required repairs and maintenance to the property while they're waiting for it to close. Alternatively, if the seller is buying another home while they're selling, an offer that allows them to close on the house and then rent the house back until they secure housing, or which has a more flexible closing date, might be more appealing. Oftentimes, there's a misconception that if someone can close quickly with a cash offer, the seller will be more likely to accept a lower offer and price. Unfortunately, this is only true in situations where the seller values the quickness of receiving the funds over the amount of funds. When it comes to the closing table, whether it's a mortgage offer or a cash offer, the seller still receives cash regardless. So if you ask a seller if they would wait an additional 2 weeks and receive a more substantial amount of money on their property, the majority of the time, they will wait. Strategy number 2 is minimize contingencies. The New Jersey real estate contract has several contingencies built into it in order to protect buyers from getting in over their heads on their home purchase. The 2 most people are familiar with are the home inspection contingency and the mortgage contingency. If you're not familiar with these, the home inspection contingency states that the contract may be canceled in the event an agreement cannot be reached with respect to repair requests that have come about from the home inspection. The mortgage contingency says that if the buyer is unable to obtain a mortgage or if the house does not appraise and an agreement cannot be met, the contract may be canceled. In order to make your offer more competitive, you can elect to waive certain portions of these contingencies. For instance, some people are choosing to waive the home inspection and appraisal of their offer. Now, if you're not savvy about parts of the home or do not have a hefty down payment, I do not advise waiving both of these in their entirety. A less strong but still effective option is to limit the inspection and appraisal waivers. For instance, with regard to the home inspection, you can say you'll only make requests on major structural or environmental issues. And on the appraisal, you can say you'll cover up to a $10,000 difference if the appraisal comes in low. This gives the seller confidence that they will not have to be heckled for minor repairs and they will be guaranteed a certain amount for their home. I cannot stress this enough. If you do not have additional funds on hand to be able to make potential repairs or cover an appraisal gap, please do not overextend yourself. Budgeting is so important, as I mentioned previously. I did a video last week with my financial advisor, Sunit Patel. Check him out to get some advice as to how to best approach this with your specific circumstance. Before we move on to strategy 3, one more contingency I will mention is the buyer home sale contingency. If you're a buyer who's also selling a home, it is ideal to have your home on the market and have a contract secured before you start looking at homes to buy. If you feel rushed by doing the process this way, there are lenders out there that offer bridge loans. This allows you to pull the equity from your current home in order to buy the next house so you can get settled in there before selling your home. Again, please check to make sure if this option makes financial sense for you based on the payment that you'll have with the bridge loan. Strategy number 3 is don't be afraid to throw your hat in the ring. Sometimes with the competitive nature of the best and final situation, people can get overzealous and they realize they do not actually want to purchase the home after their offer gets accepted. In order to get out of the deal, oftentimes they'll nitpick on the home inspection, the transaction will fall through, and here's the best part, potentially give you the second opportunity to be next in line for this house. For this reason, I recommend throwing your hat in the ring, even if you're not the highest offer, because the first offer may fall through and give you the opportunity to lock in the home that you love. Now, disclaimer, does this mean I think you should offer a low offer when you know the seller has several over asking? Absolutely not. That would be like wearing mittens into a boxing ring, and just don't do it. So that's best and final offers in a nutshell. If you would like a one-on-one consultation to go over any questions you may have, please feel free to book a one-on-one Zoom call through the link in my description. Join me here next week as we'll discuss the market trends in Central New Jersey area. Have an amazing week. See you then.